So oil's had yet another big breakdown here this morning, got to 84.30 somethings, right? We have a DSR support level here that was broken. We did an outside return here, tested that as resistance, and then we just drove down to these new structure lows here. New structure high, higher low, new structure high. I'm anticipating that we'll return up to this level here. And if we do, that would be a great spot to look for a fade, a short. If it develops with RSI being overbought when we get there, we know that it's a former support level, anticipated resistance, and then how do you get the further strength at that zone? You'll know from the RSI obviously and price that you're there, but the final leg would be either a cluster or a pattern or a combination of the two. Often they happen in tandem. So where the anticipation comes, Frank, is bigger picture. You don't need to go microscopic there and anticipate where a black tip might come in. That's what I do. That's the way I think you should approach it, is to think about where price is now, where might it go, and if it does something there, what would it look like and where would you go from there? So, here's something this kind of goes in line with what I was talking about with the balance beam. You may not have an active signal when you're looking at it, but you can get ready for what's going to happen. So I know that this DSR support level here could turn out to be resistance as we move up here, especially since we just drove down to new structure lows. I know that I need to see RSI overbought at that level, so I want to be on alert for that to be a component. So I've got strength of signal 1 from RSI, strength of signal 2 at a former DSR. Strength of signal 3 would look something like this. Turning point, black tip, mini double top, breakdown, white candles going to black, divergence on RSI. So you start to add that, and then you get your strength to be short. If you wanted to, you could look at the price movement into a new structure low or new structure high and time qualification. So from the breakdown point here at about 7 in the morning Pacific, we're already 40 minutes into this thing. So you could time qualify movements that have gone from a DSR level to a new structure high or new structure low and return to that level, and then look to have a resting sell order there just because it's getting back to that zone where it had not been for a very long time. I call this a boomerang, where you have a big V, and they work better where you're selling the level than buying it. If you have a big rally that comes up and fades all the way back down and comes back to support, often it's done and it doesn't bounce as often. Those are the tendencies that I've seen. When you have a breakdown like this that's been away from that DSR for a long time, what does long time mean? 30 minutes, an hour? And you have this big symmetrical V in development. As it gets back to that former DSR, that's a good spot to fade, and it has a much higher probability of moving down. Whatever the case is, anticipation is what I do when I see price, whatever chart I'm looking at. I could look to be short here. I've got divergence. I've got a little mini double top building. I got a cluster on both sides here in development. Here's where we had support. Here's support again. If it breaks down, there's a good chance it would fade. It's more aggressive because there's not a DSR level there, but I can see structure coming into the mix. If I wanted to do that based on structure, I could do that. But to categorize and add a better repetition, because pure structure is a bit interpretive, but the way I do it, I would say it's systemic, but if you want to make it more systemic altogether, then require a touch of a DSR. You want to go another step further, only look at active DSRs. Then you're going to limit this boomerang trade, that's for sure. You would require price to move up here, live up here for a while, and then break down after printing a DSR. By that time, it may have already moved a fair bit away from it. Selling that level here, like we just talked about, here's a little bit of a fade off of that already. Not much, but you can see that there's a resonance at that prior zone. We just looked at this and it just came to be, right? We didn't take out the lows there, which likely would have sent it lower. Here's the outside return, and now you've got a scalper based on a resting sell order there. That's the boomerang trade right there, folks. 7:50, from 7 o'clock to 7:50, you got 50 minutes. You got a big V going, and you that outside return, and there you have it. More predictive analysis coming to be right there. So just talked about this a second ago. Knowing where that DSR level is, looking for the outside return, it actually punches into that zone pretty well. Here's a little mini double top, FE entry right there, and you've got your scalper ready for dinner tonight. Fib dots coming into the mix here, containing price pretty well if you happen to be in with more. Anticipated zone of resistance there, breakdown, and really when it breaks back below the floor of this DSR here, it's $400 in favor already. The key is you might get stopped out of some momentum runs because of the volatility and the fib dots, things like that. Look at this move all the way down here. Resistance becomes support, becomes anticipated support right there, fib dots out. Anticipated resistance point, follow through, and a huge gain on that move right there. All happened within minutes. But at one point we were here and it looked like this, and you're thinking what might happen, right? So that's what I do all the time. So now that we're here, what might happen? Well, if you want to keep things higher order, then you want to see the developments at the DSR levels. So where we are right now is we're between this DSR level and this one here. So if we drive down here, this would be an area to look for a bounce. What would that look like? If it drives up, maybe it's going to be deja vu all over again. What if it drives up to this level here and it takes out the ceiling of this old DSR level? And what if, as it approaches that zone, it looks something like this, where the fib candles are white, RSI was over 50 earlier, and you got the fib dots green, and it just takes over that top line and off it goes, and you get a little breakout. Where might we go if we break out? Almost like the balance beam, where you go through a area of trading commitment, you go through an air pocket, you're likely to move up to the next balance beam, right? So anticipate where price might go, what it might look like. In the trade directory, those are all the greatest hits. I mean, those things are going to happen again and again and again. Here's the boomerang trade, as I like to call it. Huge follow through, right? That's going to happen again and again and again. Whether it's the NASDAQ, the mini Russell, gold, oil, you're going to see price break down from a level. It's going to drive down hard. It's going to be moving back up in a symmetrical fashion. It's going to have a time qualified passage from end to end. Usually it's going to be over 30 minutes. Sometimes it'll be over an hour. And as soon as it returns back to that zone, you sell that level and down it goes. That's the one resting sell strategy that I use with the DSRs. Is I won't necessarily need to see anything else other than price arriving at that point after the time qualification and the sell-off qualification here. That's really what the DSRs are all about right there in a nutshell. But get in the habit of looking for where price might go. Ask yourself what it might look like when it gets there. You know, if we get back up here, what's it going to look like if it fades again? Well, RSI's got to be overbought. It's already overbought right now, so that's a bit of a warning that it's maybe not going to fade. It could, but it's already pressed up there, so to get divergence is going to be a little bit more difficult. Candles are going to turn black if it's going to head down. It could see a SOS, it could see a turning point, it could see a black tip arrow there, it could put in a double top, could break that swing low for the favorable excursion entry and then fade back down. It could put in a double top here, it could put in an FE entry, go a couple ticks in favor, and then it could go back to white candles. Maybe it puts in a black tip north, pointing up. Maybe RSI comes back over 50 and you've got a potential trend continuation signal in development. If your stops are up here, are you going to let this thing break out and take you out in the middle of this zone up here? I'm not. I'm going to defend this zone here. If we come up here once, twice, we come up here again and fade, I'm not holding a breakout. That's a cluster trail rule that I use, and that would minimize loss. And I'm ready for the breakout. If this thing comes up here where it is right now, here's an SOS, but where's the end of move? I already had my one sell the level moment here. Now I'm waiting for something else to develop. So I got a counter trend arrow, just one, and black candles. Here's a break below that level there that we looked at. So there's strength of signal to be short just based on that, not as much. But you have RSI now coming from overbought to below 50. You have black candle follow through. You have a single bar. Basically, you have a mini boomerang trade there. And then you have a break below that DSR floor. So you've got strength of signal to be short there. But the cautionary thing is, if this swing higher here is taken out, very likely it's going to be moving up to this old DSR up here. Here's the green bullish arrow that I just talked about a second ago. On the little pullback, it breaks a little bit lower. That pullback comes into the mix here, and then it goes bullish with a little mini green arrow. Let's see how we have enough time to see that. Well, you guys can watch that later on in the day to see what happens with this. It's basically at the round number of 85 right now. So if RSI starts to come back over 50 here, and we break into the floor, take over the ceiling, take out these swing highs here, we're in breakout land. Guess what? We still have green fib dots here. Candles will be white by definition as they start to move up. And then you're ready for a breakout, and you're going to see a 35-cent run. Now, as it starts to move up here, it could be putting in a larger scale pattern. It could be putting in a double top. So now, while you only had a one bar cluster here, now you've got a nod to a bit of a double top in development right now. So you could look for an FE entry here and a breakout order there. Here comes the breakout. Okay, so technically we've made a new structure high right here. We've got fib dots bullish coming into the mix there, and there's the breakout. So very likely this thing is going to, with this area here holding, it's going up another 35 cents. Now some breakouts will come up just a little bit and then they'll reverse back down, and that's the nature of volatility and getting back into a trend and that type of thing. But there's the initial fade here, anticipated that, and then here's this outside return, anticipated the weakness of this fade here, and then the subsequent breakout. And here comes the fibs into the mix here. They're still on the bull side, and now we're getting a little underlying weakness on the breakout with SOS to black tip. Some of these things will stop out relatively near break even as the fibs start to pull up. Other ones will go on huge runs, and if you use the fibs for your profit capture, you can get some huge runs on them. I mean, not every day, but boy, a couple of those a month, and they really crank up the gains. Here's a great area for a resting exit order. We already know that there's a DSR level here. If we come back up, this is sort of like a fractal boomerang trade here, coming all the way back up. So a resting order here to book profit, assuming it moves up there, and even a secondary order here to go short would not be a bad idea. The clues going against you, right? Now we have RSI coming from being overbought, where if it hangs out overbought, it's really a momentum indicator. As it starts to pull back, it starts to show weakness. Now I've got white candles going to black. That's a knock against the breakout. I've got SOS to turning point. That's a knock. I got a 2-bar cluster. If I see RSI below 50, there's a good chance this thing is going to be breaking down a lot more. So I can take the 2-bar cluster. I can take the black candles as cautionary on the breakout. I can take the now building divergence here in RSI as cautionary as well, and I could have my stops at break even on this. That's pretty much the way I see it. Now, if volatility comes into the mix here and it just sort of chops up and lives around here, it may figure out what it wants to do later. Go back down here, move back up. But those are the initial setups as they develop. You anticipate what might happen, you wait for it to happen, and then you respond. And there's a really good representation. Literally, this spot here went right along as I described it before it happened. Exactly. And so did this right here. There's the weakness coming back in as it breaks back below. RSI is below 50. So not really a clean move out. The fib dots are still containing price by a tick. But that's the way that one happened to work out. You bet, gang. Good to hear from you. Appreciate those comments. All right, gang. Have a good weekend. We'll see you back here.